Today I'm going to talk about how to fill out the IRS Form W-4 to get a bigger refund. That's exactly what I'm going to go over today. So we're going to go through the online version, but I'm going to point out something so you can possibly get more money back. If this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, certified financial planner with Sickle Hunter Financial Advisors. I'm going to go through the online version really quickly to show you what the W-4 looks like on the online version, and then I'm going to compare it to a tax return. So you can see how we can get a bigger refund with just knowing a little bit of information and a few adjustments. We might be able to get you a little bit more money back in your paycheck or a bigger refund at the end of the year. So let's look at the online version. Okay, so I'm going to go through the online version right here, and we have it up on the screen. I'm going to check off married, filing jointly. No one can claim us as a dependent. Click continue. The first part over here is how many jobs you have. If you have one, if you have two, if you and your spouse each have one, put two. So it's the total amount of household jobs that you have. So we're just going to stick with one for simplicity. And if you have a 401k, again, you can check it off. But we're going to go right down to the bottom, click continue, and we're going to enter in an income. So I'm going to put in $39,000. Put whatever your income is, put 0 for any bonuses. If you have bonuses, put them in there. And if we didn't withhold anything, here we go, scroll to the bottom. You can fill this out according to how you get paid. So if it's weekly, it's every 2 weeks, twice a month, or monthly, go ahead and check that off. We'll just put twice a month. And we'll put January 1st because we're going to have this job the whole year. So you put January 1st to December 31st. And then we're going to move forward. Now this section down here, right here, the adjustment section, I want you to pay attention to it. We're going to start off with putting 0 in there. So we're not going to save anything. What this section is, this is specifically for the traditional IRA. It's deductible IRA, okay? It's the part that's deductible. So we're going to click continue for a second. Go to the next page, click continue again. We're going to take the standard deduction of $24,000. Okay, so here we can see that our tax liability for 2018 is an estimated $1,503. Okay, if we go back for a second to this page where we had the IRA, let's put in $2,000. 2, 3, and click continue. Click continue again. And now you see that it dropped. It dropped to $1,303. So it went from $1,503 down to $1,303. And why is that? Because which tax bracket are we in? We're actually in the 10% tax bracket. So we put $2,000 into the IRA. So 10% of $2,000 is $200. So we saved $200 in taxes, but we actually saved more. And this is actually not 100% correct on our estimated tax liability. It's not $1,303. It's actually $303. If everything is the same, it's $1,000 less. Here's why. Let's go to the tax return. Okay, so here we're looking at a fictitious return. It's Fred and Wilma Flintstone. So in line 1, we put in $39,000. So right here, we can see that's $39,000. And that is how much we've earned. So that's what we put on the W-4. Well, if we scroll down here and we save $2,000, it's going to bring down our adjusted gross income by $2,000 to make it $37,000. Then we bring it down another $24,000 because of the standard deduction. And so that's going to leave us with $13,000 in taxable income. Let's just zoom right down here to line 12. Line 12, what this is showing in Schedule 3, I'll go to Schedule 3. And there's a line item right here. It says Retirement Savings Contribution Credit, attached Form 8880. That is also known as the Savers Credit, which is right behind me. The Savers Credit. So if you save, you meet certain income requirements. If you save $2,000, up to $2,000, you can get a credit either for 50%, 20%, or 10%, depending on your income level. In this case, it's going to be the full amount. So it's going to be 50% of the $2,000 that we saved, a $1,000 credit. What's a credit? A credit reduces your tax liability dollar for dollar. So if you owe the IRS $1,000 and you have a $1,000 credit, It means you owe the IRS zero. So let's go back to that 1040 for a second. Let's scroll to the bottom of that 1040. If you notice here, it says we're going to get a refund of $1,000. A refund. Why? Because we put in $1,303 according to the W-4, but $1,000 should be coming back to us. So while we put in $1,303 for over the course of the year, by saving that $2,000, we're going to get $1,000 back. Now let's go back again. Let's go look and see what happens if we don't save anything into our IRA. So here, what you can see is now it went to, we have to pay $200. Why is that? So not only did we take away the IRA contributions, remember before it reduced our tax liability by $200. So now that's gone and our $1,000 credit's gone. So therefore, now we have a tax liability of $200 because we didn't take advantage of the saver's credit. So that's a big deal. So it's actually a difference of $1,200. We reduced our taxable income and we got the $1,000 saver's credit or the retirement credit. So while the W-4 will show you your taxable income, it's not going to also show you the credits, or at least it doesn't yet. So there's an opportunity where you can save even more. You can save for yourself and get a credit. So it's a win-win. Right behind me, this is the board right here that we can see the income limits for the saver's credit. Now I'm going to go over the saver's credit in another video so you can understand the specific limits. I used the saver's credit because it's a great way to reduce your taxable income and get a credit if you qualify. Now there's other credits. So if you make way more than 38, 39,000, or even at the higher end of it, I think it even is going to go up to 64,000. So 64,000 is the most that you can make and still qualify for the saver's credit. So with 64,000 being the top amount that you can earn, remember, it's not just 64, it's 64 after you save and after all your credits and everything else. So you want to make sure that you're saving enough so you can get your taxable income. So it's not your total income, it's not your gross, it is your adjusted gross income. So you have to take a look at that and see if you can qualify to get your income below a certain threshold in order to qualify. Again, there's more credits than just the saver's credit to qualify for, so you want to make sure that you're looking at it proactively. I hope this helped. If you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.